Cool. So at this point, we've pretty much explored the trading system, exactly, what it is to do, how to get started, how to start thinking about this, um, hopefully steps to take and, start working on homework on your own. Getting to that level of confidence and competence where you can start getting in the trenches, knowing setups that'll make EV, chasing that EV, that's what it's all about. So the next few videos are going to be on system refinement. So we already have the basics down. Ideally, you've played around with this stuff some on your own. And now, like, what are the ways that we can scrape additional value out of this? And like, what are ways that are going to allow us to use this system a little bit more efficiently? And facilitate working towards our goals and getting where we want to be a little faster. So this first part, in this mini series within the series is going to be focused on selecting a time frame, and trading in the right time frame, being able to select that and chase trades that are appropriately like scaled to the appropriate time frame per what the market conditions are telling you. I don't have a whole lot on the presentation side. I'm going to hop over to trading view and hopefully freehand some examples. So hopefully this goes well. So selecting the right time frame in general, we want higher time frames, which in this system represents the higher sized range charts. So 128, 64, those ones are where you want to be. The higher the time frame, the greater the confidence, the fewer signals will be given. So if you're on the 128 range chart, you're going to not have as many actionable trades as if you're on the 16 range chart. Hopefully the ones that you do get are going to be better. And it follows that if there are signals to take on the 128 range chart, those are the signals we want to be using. If there's signals on the 16 range chart and the 128, we want to prioritize the 128 because these are going to be higher confidence and they're going to be given less often. Ideally, we want to find the time frame that has confidence signals and actionable trades at the best possible frequency. So maybe the 64 range chart has like good trades and the 128 doesn't. And then the 32 has good ones and the 16 has good ones. In that case, we want to choose the 64. We want to get to the largest size of our charts that we can get to and still have actionable trades. In terms of how this actually plays out day to day, this will depend on volatility and market conditions. Some days the 16 range is where you want to be at. You'll have lots of actionable trades that'll be high quality and you'll be printing money. Other days you'll just be like chopping around and getting stopped out too many times and nothing's going to be trending and it's not really going to work. So almost always the 128 range chart is where we want to be. And it's like usually going to work out for us if we're seeing trades there and taking them. Nothing works 100% of the time. Some days are just shitty, but in general, that's how things are going to work. It's the best daily practice. You log onto your computer, you have your cup of coffee, you boot up TradingView, check the 128 range chart, see what it looks like. Go to the 64, go to the 32, go to the 16. If you log in and pull up the 128 and we're setting up like an AO div, a stock div, a continuation stochastic trade, then we're just going to stick with the 128 and we're not going to really worry about the lower ones because they're pretty irrelevant if we're chasing trades on the higher time frame. Higher time frame, it allows us to potentially have a higher risk parameter set. So maybe we risk 0.5% on the 16 range chart and we risk 2% on the 128 chart. So if we hit that trade on the 128 range, that's a 6% win versus just a 1.5% on the lower chart because we're just more confident in risking more the higher the time frame we are. So in this example, this is the 64 range chart. You can see we've got a pretty clear uptrending market structure going. We start putting in stochastic crosses that potentially could be taken and give a continuation trade. In this example, maybe we get a big push and we wait for the AO to cross negative, And once the AO is negative, we start taking the stochastic crosses to try and catch a continuation play. And we just keep getting stopped out because the market is still in this cool down or correcting phase before allowing us to re-enter. So in this case, we have what should be a pretty strong uptrend established. And, we're just printing tons of stochastic crosses that aren't playing out. We don't really get a play out based in this pattern, which is because we're in the wrong time frame. And the 64 range chart is just having too much volatility, too many false signals. It's not where we want to be. This is the same area, but on the 128 range chart. So the candles are twice as big and we're zoomed out. Now things are starting to make a lot more sense. Before we had just this giant push that we couldn't really, didn't really give us much information other than we're getting a big push. Here we have, a divergence in the stock and the AO playing out. I'm putting in another stochastic div up here, showing us that maybe things could be slowing down. The AO bar flipping, going down, getting the AO cross. We got a stochastic div here, which we can enter and will give us a, great trade entry in one try. Just based on that. If we waited for the AO to cross negative and then entered on the next stochastic cross, that'd be the same trade. If we were just entering as rapidly as possible on stochastic crosses, we'd fail too and then win. If we were using, a 4-step scaling process, it'd be like 1R, 2R, and then make 9R, so 6 total. That would be profitable. If we entered on this little AO div, shadow div type of thing here, that would be profitable. If we entered on the AO cross, that would be a good trade. So there's just like a ton more on the 128 range chart for us to scoop up, and things are working out a lot better. In general, you want to be finding the time frame that has the fewest signals, like given for a trade to actually play out. So, before on the 68, this was like the 64 rather. This was like 7 stochastic crosses. And then here we got 3. So, somewhere in the 1 to 4 range is what we want to look at, what we want to look for, because that's what's going to give us actionable trades. Back here, it would have taken a fail and then a re-enter, or just entering one time on the AO div. The AO cross gives us some value. We got a stochastic divergence. If you entered on the divergence, you could have caught a counter trend short. And just an example that, in this case, this is the time frame that's the most actionable. I'm gonna hop over to trading view. Remember what's even going on here. I'm in a little short now. This is Sunday evening. We just got the open. So hunting a little bit of counter trend action here. So on the 128, basically we want to be hunting, what gives us the fewest signals before printing something actionable. We can see we had like the shadow div here thing that's playing out. I entered this trade that played out and won. If we look at the 64 in the same area, we do get across here. So like, I guess this wouldn't have been super actionable just because the downtrend was like going so far. But we do see that, stochastic cooled down and got across, and then that ended up playing out and would have been, profitable trade to take. We cool down and we come back into the stochastic area and we get 2 crosses. So we could have entered on the second one and that would have played out. So in this area here, the 64 range, was working well. We had a bullish shadow div that you could have taken. And this was Wednesday last week, which I think was a CPI print, or we had some kind of event, and volatility just jumped a lot. Last week was a kind of a funny one, I think. We had 2 events that both just affected stuff a lot. But after this volatility pump, it's kind of just blown out what we were working with, out of the water. Really giant push on the 64. We push up, we cool down, got a couple tries to re-enter. Could have taken a long here potentially. I'm gonna short, like based on this setup, just with the AO, like divergence thing here. It's not a super strong signal. I'm just in one contract, so not very highly committed. So this stuff on the 64 range chart would have been pretty tradable. On the 32, if we get through here, you can see we're starting to put out a lot more signals. After the initial pump, we kind of cooled down. We had pretty clean action on the AO, like just one bar flip. You can see the bar flip's bullish here, so we could have entered a long based on that. That would have played out well. A little bit worse kind of after that. We get the AO crossing again. We get a few crossovers that don't really play out. Stuff on the long side doesn't really play out until you entered like somewhere over here. So probably like hunting for a trade on the 32 would be too low time frame through here, just because not much is happening. Kind of an example of like a bad area to be trying to trade. You can see through here we've got the AO divergence put in, which is essentially what I'm trading. I'm just zoomed out a little bit more. This could have been kind of actionable compared to where I'm in. It would have allowed for an entry up here. So if I had taken that and held the margin open position through the weekend, that'd be a good spot to be. I did actually take that. I just closed it down and re-entered based on the like current open we have. This area is like good. It's just a pretty simple, you'd probably call it a shadow div on the stochastic before all this stuff takes off. So this is an area the 32 would have been appropriate for. Some stuff through here, maybe. Getting slightly lost in the weeds, more or less, like relating stuff to the chart. If I was looking to trade, which I am, like the current session that just opened, looking at it a little, I'd open the 128 chart, kind of see, what's going on. We've got a little shadow div on the AO and some bullish pushing up. Definitely nothing actionable. Then on the 64, we've got this signal going that could be valid, could be considered kind of weak. I wouldn't overcommit to, but could be tradable. And in the case of what I'm doing right now, I'm just sticking with this. I'm not going on lower time frames and trading. If the signal wasn't here, you didn't want to take it, you try and go into the 34. You can see that we're in this AO div pattern playing out, which maybe could be actionable. It's probably not going to afford as good an entry as if you just got in, like right here. Should have been up here. But if you had, that would have been actionable based on this time frame. There's not really anything super actionable going on here other than just holding what I'm already in open. And if we went down to the 16 from here, it definitely starts to get noisier. We can see a similar AO divergence thing going on here. So could have entered a short. I think if you shorted here, you would have gotten stopped, but you could have gotten back in maybe. And this trade would probably have just been completed by now. Since then, we've had, some long signaling type of stuff, which I would have ignored based on the presence of the AO div. We get the AO cross. The AO flips if it doesn't do anything and just kind of grabs and pushes down. So I certainly wouldn't be hunting for longs based on the 16 here. I would say this is not super actionable and would just lead to you getting chopped around. Yeah, so based on that, like the 64 is what looks the most actionable currently. There's nothing present on the 128, and then the lower ones don't really have entries or look like they might chop you out if you tried to get involved. You'd be late to showing up to what's going on the 32, and then the 16 is all pretty much just noise. So, based on this example, I would stick on the 30, on the 64. Fairly weak, like I might just get stopped out overnight, but you don't have to win every single trade. And felt right to dip my toes in a little bit, and I kind of already had the short bias based on the divergence trade from Friday, which I closed out of, but still might get some kind of play out and push down into here by the time morning comes around. I'm gonna cut stuff from there before it gets even more ramblier. This is how I generally think about looking at time frames and selecting the right time frame to play around on and make some trades.